The candlestick over here is called a bearish spinning top. Price initially opened on this particular zone here, and we had the buyers taking the market to this particular resistance. Immediately price tapped into the resistance, sellers pushed price down to this particular low over here, and buyers were still present, and price finally closed on this particular zone. With this, you can actually see that there is still presence of buyers and there's presence of sellers. This typically means that there's a battle going on at the moment. Immediately you get this pattern on the resistance, you can go ahead and place a trade. But if you want an extra confirmation, you need to wait for a new candlestick to close below this particular zone here. Right, immediately you get this particular candle, you can just go in for a sell. Put your stop loss above the resistance and target wherever you want to target as your take profit. You should begin to see market dropping a series of lower low, lower highs, just like this. The next bearish candlestick will be a bearish hanging man. This particular candle here is called an hanging man. Immediately price closed on this green candle here, price spiked to this place here and touched this resistance line, and we add this bearish movement down to this particular low. Then immediately buyers pushed the price, and finally price closed on this place. There's this particular space in between these two candles. Or each time you see this type of space, market has to come back and fill down this particular space. There must be a candle closing below this particular candle here. If you jump into this trade immediately after this price closes here, the risk will be high, because for buyers to push price to this particular zone here, it indicates that there's still presence of buyers in this particular market. Although we already know that the price will definitely fill this particular space over here, or we call it a window. What you need to do is to wait for a green candle in this direction. Once you have a green candle covering this particular window, you can go ahead and place a sell on the market over here and put your stop loss above this particular resistance over here and target wherever you want to target for your take profit, and boom, price should begin to move in series of lower low, lower high, lower low, lower high. The next candlestick pattern will be a bearish shooting star. This particular candle over here is called a shooting star, and price initially opened on this particular zone here. Buyers took over the market and pushed price to this high here, but immediately it tapped into this resistance. There were more sellers on that resistance, and the sellers pushed the price back to this particular low over here. After much struggle, price closed on this particular zone here. This is clearly indicating that there are more sellers on this particular market here. What you need to do is to just come over here and place your entry. Once you get this type of move, go ahead and place your entry. Put your stop loss above the resistance, and the market should push down in this direction. Once you get your take profits, exit the market, and that's all about this candlestick. The next bearish candlestick will be a gravestone. Now let's go back to the family of doji candles, and here will be the gravestone over here. This particular candle here is called a gravestone doji, and it's actually telling us a story. The moment price closed on this particular zone here, we had the open of this particular gravestone, and buyers took charge of the market and pushed price to this particular resistance here. Immediately price tapped into the resistance, sellers were present on this resistance and they pushed the price back to this particular open. The price closed on the same price where it actually opened. The buyers and the sellers are both strong on this particular zone here. So to get a confirmation, you need to wait for a bearish candle closing downward like this. Once you have this bearish market, you can go ahead and place a trade immediately after the bearish market. Put your stop loss above the gravestone and target wherever you want to target as your take profit. The next bearish candle will be a dark cloud. This formation here is called a dark cloud. Immediately price closed on this particular green candle here, there was a spike in the candles here, and we had the open of this particular candle over here. Price went up, and buyers pushed the price to this particular resistance. Sellers were present in that particular place and they pushed the price down to this low over here, and after much struggle, price closed on this particular place here. To identify this type of movement, you need a little spike in the market like this, and you should expect the price to come back and fill that particular spike. Once you get this red confirmation here, go ahead and place a trade after that red confirmation. Put your stop loss above this particular zone here and target wherever you want to target as a take profit, and boom. This particular formation is called an evening star. It's made up of a green candle, an indecision candle. This represents a common doji candle and a bearish engulfing candlestick. Price actually closed on this particular zone here, and we had indecision in the markets. At this point, the buyer's pressure and the seller's pressure were already much on this particular zone, and this particular red candle is the confirmation candle. So this is confirming that the bearish has finally won this particular movement. So once you have that particular bearish market there, you can go ahead and place an entry on this particular place. Put your stop loss above this particular resistance here, and you should start getting this particular movement from the market. The combination of these candles over here is called three black crows. This is a clear indication that sellers have already gained control over the market. Price was actually pushing upward here, and the moment it got to this resistance here, we begin to have these red candles, right? So this is a good confirmation that sellers are already gaining control over the buyers. Once you have these three candles here, you can go ahead and take an entry on the last candle over here and put your stop loss above this particular zone here. Price should actually drop immediately after you do that. Now, the previous candle must be smaller compared to the next candle. This candle here must be smaller compared to this, and this must be smaller compared to this as well. The next candlestick we'll be working on will be bearish engulfing. For a bearish engulfing candle, you need a close of a green candle, then a red candle engulfing the whole of the green candle in this manner. So this particular red candle here is closing below the green candle. That is showing the strength of the sellers on this particular zone here. So this is a strong signal that the sellers has already gained control over the markets. Once you have a bearish engulfing candle, just go ahead and place an entry there with your stop loss above this particular zone here, and the price should drop. That will be all about the best candlesticks you need for bearish reversal. Now let's proceed to bullish continuation.